Reviewing these depreciation questions can help you pass your next accounting test. I'm Scott Meister, and this is Test Prep Episode 9. In this video, we'll take a look at some financial accounting questions related to depreciation. This video is meant for students in their first accounting class, and if you want to see more videos like this, make sure you subscribe to my channel and ring the bell to be notified when new videos come out. Also, if you know anyone that might benefit from this video, make sure you share it with them. Question 1 says, an asset's book value is its market value, its original cost less its salvage value, or its original cost less the related accumulated depreciation. So an asset's book value is the cost less its related accumulated depreciation. So that is going to be a D. For question 2, it says the journal entry to record depreciation on equipment includes a debit to equipment, debit to depreciation expense, credit to equipment, or credit to depreciation expense. So whenever you record depreciation, it's going to be a debit to depreciation expense, and then we're going to credit accumulated depreciation. So based on the answers given, the only one that makes sense is debit to depreciation expense. For question 3, it says Smithco paid $22,000 for equipment. It costs $1,500 for delivery and $450 for installation. The cost of this asset is $22,000, $22,450, $23,500, or $23,950. So whenever we're looking to determine the cost of a fixed asset, we need to include all expenditures incurred for acquiring and preparing it for use. So when we look at the delivery cost, that would be included. And when we look at the installation cost, that too would be included. So we need to take $22,000, add the $1,500, and then we're going to add the $450. And when we do that, we end up with $23,950. So the answer here is D. For question 4, it says ABC Co. purchased a truck on October 1st, 2020 for $25,000. They used the units of activity method and estimated it would be driven 200,000 miles over the next 5 years. The salvage value is estimated at $5,000. The truck was driven 16,000 miles in 2020. What is the 2020 depreciation expense? $400, $500, $1,600, or $2,000. So since we're using the units of activity method, that is going to be cost less salvage value divided by the estimated useful life. So we have our cost, that's $25,000, less the salvage value of $5,000. And then we're going to divide that by the 200,000 miles. So that's 20,000 divided by 200,000. And that gives us a rate of 10 cents per mile. Then what we're going to do is we're going to multiply that rate by the actual miles driven, and that's 16,000. So multiply that by 16,000, and our answer is going to be 1,600, and that's our 2020 depreciation expense. So the answer here is C. Now, sometimes with units of activity method, students will get confused because they think that they'll have to take a portion of the year, because here it says October, so they think they may need to multiply this 1,600 by 3 months divided by 12 months. That's not the case. When you're using units of activity, you want to focus on the rate that we calculated, that's at 10 cents, and then multiply it by the actual usage in the year. And the actual usage is that 16,000. So just keep that in mind. You're taking the rate times the actual usage, and that will get you your depreciation expense. So for question 5, it says, equipment purchased for $65,000 had an estimated useful life of 7 years and a salvage value of $3,400. What is the amount of depreciation for 1 year? Use the straight line method. $5,400, $5,886, $8,800, or $9,286. So we're using the straight line method. So that's going to be our cost less the salvage value, and that's going to be divided by the estimated useful life. So the cost is $65,000 less $3,400, that's our salvage value. And we're going to divide that by the 7 years. So that's going to be 61,600 divided by 7. And when we do the math on that, it ends up being 8,800. So the annual depreciation is going to be 8,800, so the answer is C. For question 6, it says, equipment purchased on January 1st, 2020 for $65,000 had an estimated useful life of 5 years and a salvage value of $5,000. What is the amount of depreciation for the first year? Use the double declining balance method. So the double declining balance method, we're going to take our cost, and we're going to multiply that by 2 divided by the estimated useful life. We get this 2 here because it's double declining. And we're going to take the cost here as $65,000. Multiply that by 2 divided by 5. So when we do that, we're going to end up with $26,000. So the answer here is going to be D. Now, one of the things I wanted to point out with double declining is we don't use the salvage value. So notice when I calculated this, I just took $65,000. I didn't decrease that by the salvage value. Let me know in the comments if you have any questions about depreciation or these test prep questions, and let me know if this video is helpful for you. For question 7, it says, equipment purchased on January 1st, 2020 for $83,000 had an estimated useful life of 5 years and a salvage value of $7,000. What is the journal entry for the depreciation for the first year? Use the double declining balance method. Debit accumulated depreciation $30,400 and credit depreciation expense $30,400. Debit equipment $33,200 and credit depreciation expense $33,200. Debit depreciation expense $33,200 and credit accumulated depreciation $33,200. Or debit depreciation expense $30,400 and credit accumulated depreciation $30,400. So whenever we record depreciation, we are going to debit depreciation expense and credit accumulated depreciation. And this makes sense because we want to increase an expense account. And in order to do that, we need to debit it. And then we want to increase a contra asset account. And in order to do that, we need to credit it. So based on this information, we know it can't be A or B. It can only be C or D because both of those say debit depreciation expense and credit accumulated depreciation. So next we need to figure out the amount. And it says here that we're using double declining balance. So we need to take the cost, and we're going to multiply that by 2 divided by the estimated useful life. And as I mentioned earlier, we get this 2 because it says double declining. So we have 83,000. We're going to multiply that by 2 divided by 5. And so that leaves us with 33,200. So the answer here is going to be C. And as I stated before, when we use the double declining balance method, we don't use the salvage value. So for question 8, it says, equipment purchased on January 1st, 2020 for $83,000 had an estimated useful life of 5 years and a salvage value of $7,000. Using the double declining balance method, the book value of the equipment on December 31st, 2021 is $27,360, $29,880, $48,640, or $53,120. So we're using the double declining balance here, so it's going to be cost times 2 divided by the estimated useful life. And that's going to be 83,000 times 2 divided by 5. And when we do the math on that, we get 33,200. So that is the depreciation for 2020. Next, what we're going to do is we're going to take this 83,000. We're going to reduce it by the depreciation expense for 2020. So that's 33,200. And when we do that, we end up with 49,800. So this is the book value on 12/31/20. Next, what we're going to do is take the book value and just bring it up here. So that's 49,800. We're then going to multiply it by our 2 divided by 5 years. And when we do that, we're going to get 19,920. And that's our depreciation expense for 2021. So now I'm going to take the 12/31/20 book value, that's that 49,800. I'm going to reduce it by the depreciation expense for 2021, that's 19,920. And when I do that, I end up with 29,880. And that's my book value on 12/31/21. So the answer here is going to be B. For question 9, it says, machinery purchased on October 1st, 2020 for $122,000 had an estimated useful life of 7 years and a salvage value of $13,000. What is the amount of depreciation for 2020 using the double declining balance method? 7,786, 8,714, 31,143, or 34,857. So we're using the double declining balance method again. So that means it's cost times 2 divided by the estimated useful life. So that means it's 122,000 multiplied by 2 divided by 7 years. And that's going to get me 34,857. And this amount represents annual depreciation, but we didn't own it for an entire year. We owned it since October 1st. So we have October, November, and December. That's 3 months. So we need to multiply this annual depreciation by 3 months divided by 12 months. And when we do that, we end up with 8,714. So the answer here is going to be B. For question 10, it says, XYZ Co. purchased machinery on January 1st in a prior year for $77,000 with an estimated salvage value of $7,000. The annual depreciation is $3,500 using the straight line method. The accumulated depreciation at the end of the year is $31,500. What is the remaining useful life of the machinery? 22 years, 20 years, 13 years, or 11 years. So we're using the straight line method, and that would be cost less salvage value divided by the estimated useful life. But in this problem, we're not given the estimated useful life. So we need to solve this another way. So what I'm going to do is I'm going to take the cost, that's $77,000. I'm going to reduce that by the salvage value of $7,000. And that leaves me with $70,000. Then I'm going to divide the $70,000 by the annual depreciation of $3,500. When I do that, I end up with 20. And this is 20 years. So what I solve for is the estimated useful life. So the estimated useful life on the machinery is 20 years. Then what I need to do is figure out how many years have we depreciated it. So I'm going to take my accumulated depreciation number here, this 31,500. I'm going to divide that by the annual depreciation of 3,500. And when I do that, I end up with 9 years. So we know the machinery has an estimated useful life of 20 years. We know we've depreciated it for 9 years. So that means there are 11 years left. So the answer here is going to be D. For question 11, it says Smith Co. purchased a truck on January 1st, 2016 for $55,000. Straight line depreciation was used and based on an estimated useful life of 5 years and a salvage value of $5,000. Before recording depreciation for 2018, Smith Co. decided to increase the estimated useful life by an additional year. Using the straight line method, the depreciation expense for 2018 is $7,500, $8,333, $8,750, or $10,000. So we're using the straight line method here, so that's cost less salvage value divided by the estimated useful life. So it's cost of $55,000 less the salvage value of $5,000 We're going to divide that by 5 years. So that's 50,000 divided by 5, and that equals 10,000. So that's our annual depreciation amount using the straight line method. What we need to do then is we need to see how many years have we depreciated it. So we started at the beginning of 2016, and then it says before recording the depreciation for 2018. So that means that the last time we recorded depreciation was for 2017. So we have 2016 and 2017. So that's 2 years. So we'll multiply our depreciation expense of 10,000 by 2 years, and that gives us 20,000. And that is our accumulated depreciation as of 12/31/17. Next, what I'm going to do is I'm going to take the cost, that's the 55,000. I'm going to reduce it by the accumulated depreciation, that's the 20,000. And then I'm going to reduce it by the salvage value, and that's 5,000. When I do the math here, I end up with 30,000. And now I need to divide this by the remaining estimated useful life. So we started off with 5 years. We depreciated it for 2 years. And then it says we're going to increase it by an additional year. So we need to add 1. So here this number is going to be 4 years. So we divide the 30,000 by 4 years. And that leaves us with 7,500. And that's our 2018 depreciation expense. So the answer here is A. For question 12, it says, Tesco purchased a truck on January 1st, 2017 for $49,000. Straight line depreciation was used and based on an estimated useful life of 6 years and a salvage value of $1,000. Before recording depreciation for 2018, Tesco decided to revise the estimated useful life from 6 years to 5 years and increase the salvage value from $1,000 to $6,000. Using the straight line method, the depreciation expense for 2018 is $7,167, $8,000, $8,600, or $8,750. So we're using the straight line method, so that's going to be cost less salvage value divided by the estimated useful life. And so that's going to be 49,000 less 1,000 divided by 6 years. So that's 48,000 divided by 6, and that leaves us with 8,000. So 8,000 is the annual depreciation expense. We need to count the years. We started in 2017, and then it says before recording the depreciation for 2018. So that means we didn't record the depreciation in 2018, but we did record it in 2017. So we really have this 8,000 times 1 year. And then that's going to be 8,000. And that's our accumulated depreciation as of 12/31/17. So next what we need to do is I need to take the cost, this is 49,000, reduce it by the accumulated depreciation. Then I'm going to reduce it by the new salvage value, that's 6,000. And that's going to leave me with 35,000. Then what I need to do is figure out the remaining estimated useful life. So we started with 6 years. We depreciated it for 1 year. And then we're going to revise the estimated useful life from 6 years to 5 years. So we're reducing it by 1. So I'm going to subtract 1 again. And that leaves me with 4 years left. So I'm going to divide the 35,000 by 4 years. And when I do that, I end up with 8,750. So the depreciation expense for 2018 is going to be 8,750. That's it for this episode. Make sure you give this video a thumbs up if you liked it, ask questions or leave comments if you have them, subscribe to my channel for more financial accounting videos, and ring the bell to be notified when new videos come out. What questions do you have about depreciation? Let me know in the comments below and I'll get them answered. Additionally, check out the link in the description for my website, passaccountingclass.com. It's a great resource for accounting and non-accounting students that need to pass their accounting class. It has more videos on similar topics, a message board where you can ask me your questions, and discounted rates for one-on-one tutoring with me. I tutor students across the U.S. via web conferencing tools and help my students succeed. I'm here to help, so feel free to reach out if you have any questions. Thanks for watching.